Yo, what's going on, everybody? It's Curtis back with another investment video. If you don't know what to do because you're new, please make that like button go blue. Please subscribe to the channel. Infinite Investors is about helping all new and non-investors make sense of the stock market. So whether it's my personal portfolio update or whether it's general investment information or stock market news, the channel is a one-stop shop for all investment information to help you become better investors. Um, Before I begin with today's video, I want to say a massive thank you to everyone that subscribed to the channel from the beginning or all of the recent subscribers. I'm really delighted with the level of growth that the channel is seeing. For everyone that's also commenting, leaving messages, asking questions, it's all very much appreciated, and it doesn't go unnoticed. So I'll obviously keep trying to produce valuable content as long as you guys keep enjoying it. Now, today I wanted to talk about Uber. As you guys know, Uber has filed to go public. They did this a few weeks back and originally set their valuation at 120 billion. So I wanted to talk a bit about their filing, their S1 filing, and also talk about my thoughts on whether or not Uber is a stock that's worth buying either at IPO or at some stage in the future as well. So as I mentioned, they set their original valuation at 120 billion, but now they've actually dropped their valuation to 80 to 90 billion. And the main reason for their drop was they were sort of sorry, what am I saying? The main reason for the drop was the performance of Lyft stock. And basically that effectively has spooked them and they decided to reduce their valuation. Now they set their share price between $44 to $50. One thing I wanted to mention is try not to look at share price as a metric in isolation. It's a pretty meaningless metric if you look at it in isolation. So if the share price of a company is £1 or if the share price of a company is £1,000, it doesn't really mean the company is valuable or cheap or expensive. You really need to look at it holistically. So share price is basically calculated by the valuation divided by the number of outstanding shares. Now each company can distribute more shares or less shares than another company, so effectively that doesn't make the share price being lower any sort of cheaper or less relevant. Similar to if you're trying to work out the value of a company, you would look at the number of outstanding shares times the current share price at the time, and that would give you the market cap or the value of the organization. Irrespective, Uber's valued it at 80 billion. Pre-IPO companies tend to do this by themselves with the help and support of an investment bank. And they look at things like their earnings, their revenue, their assets. They look at their business model. They look at how they're going to scale and grow in the future. And they come up with their sort of valuation. Now, in terms of revenue, Uber posted 11.27 billion in revenue in 2018. But they did have a net loss of 1.85 billion in the same year. Now, what do I think? I personally think that Uber is a better company to Lyft. I think it has more prospects than Lyft. So I don't think their share price performance is going to have the exact same journey or trajectory that Lyft has had previously. Now, one of my reasons and rationale is just one, because obviously Uber's on a global scale, and obviously having a global presence along with the food business and the freight business, I think they've just got a bit more of a stronger business model. They've acquired other similar businesses in other regions. So in Singapore, they've acquired Grab, which is that version, the Singaporean version, whatever. It's the version of Uber in that region. In the Middle East, the Middle Eastern version of Uber is a company called Careem, and this year they've acquired it for 3.1 billion. So in terms of this year, I do think that they're probably going to post another loss just because they've obviously spent 3.1 billion from their revenues in order to acquire Careem. And also they may be making other acquisitions. But I think in the long term, once they've started to sort of build up more revenue, I think they could potentially be profitable in the future. Now, one of their biggest challenges is always going to be legislative challenges. They are going to come against heavy opposition from a government standpoint, where there's going to be some territories that they're just not going to be able to penetrate. One example is that I went to Greece recently and there's no Uber in Greece, and you know the price of a local taxi to go not that far in Greece is absolutely extortionate. And because the taxi system there is government owned, and obviously they were really hit hard from the previous global economic crash, they're never going to let a private organization like Uber come in to allow them to take, effectively government revenue. So there's going to be similar stories like that across the world and worldwide. Which Uber just may have to live with and may not be able to sort of counteract that. They might try and find a way to subsidize or to to do it in partnership, etc. But they would have to find some real creative ways. I do think there will be growth, but I don't think it will be Amazon S growth. So Amazon S growth is that's a company that, when it went public, it was making a loss, but obviously it had such a solid business model and it grew from strength to strength. Some companies like Lyft will just never make a profit. So, they're not, from my perspective, worth even looking at. I don't personally believe in investing in a company that doesn't turn a profit. Call me a bit old school, but I don't want to invest in a company or growth organization based off hype and based off, brand equity. I want real equity. I want actual cash in the bank, because then that means I can know that they can weather storms, that when there's recessions, when there's hard times, when there's corrections, that those companies can pull through. If they're just constantly in debt and constantly operating at a loss, I just personally would never invest in an organization like that. So I think Uber will start off like that, but I do think it will eventually turn a profit. That's just my personal opinion. However, my biggest issue with IPOs recently is, I think, probably from a government standpoint, maybe a SEC standpoint. I do think that they shouldn't allow companies to IPO if they haven't recorded a few profitable quarters, because all they're doing is effectively allowing companies to line up institutional investor pockets and private investor pockets with public money, and we lose out. And I personally don't think that's okay. I actually think it's scandalous, if I'm honest, which you might think that's a bit harsh. But I think it's, white collar crime, and it's almost akin to fraud. It's probably the closest thing to fraud without actually being fraud. The reason why I say this is because every investor, all investment principles always teach you, to look at the fundamentals, look at the cash flow, look at the revenues, look at the profit, look at the growth in customers, look at their business model, look at where they're scaling, where they're growing. I just find that with all of these new IPOs, particularly tech ones, we're investing based off hype, based off brand recognition, based off a name, but these companies will never turn a profit. And so if you invest early, and the stock price falls, such as Lyft, you're just effectively losing money, but someone is gaining from that, and it's typically a private investor. So I think more probably needs to be done in order to protect us retail investors from that standpoint. It reminds me of Dragon's Den. I don't know if any of you guys watch Dragon's Den or have previously watched Dragon's Den, but when an entrepreneur would come into the den and they'd be faced with sort of Theopotheus or Peter Jones, and they would ask the question, how did you come up with that valuation? And if you didn't say anything along the lines of, my profit over the last year was X amount, you would just get absolutely ripped to shreds. And I don't think these organizations should be any really different, to be honest. But I digress slightly. I do think Uber will be profitable in the long term, or maybe medium to long term, say 3 to 5 years. But I just don't think they'll be profitable definitely not this year, just because of their recent acquisition. But potentially in the future, when they start looking at, I think they're looking at automated taxis and some other business lines as well. So potentially they'll be profitable there. But get in the comments, let me know, would you invest in Uber? What do you think of this IPO culture about unprofitable organizations basically withdrawing on or relying on public funds in order to sort of be supported? And do you see Uber as a potential for the future? Get in the comments, please like, please subscribe, and I'll catch you next time. Happy investing.